Hi there, welcome to the Peaks, Valleys, and Trends video. We're going to look at how the market moves, and then we're going to figure out how that movement can be translated into a trend. So the market movement. Now the market moves in a zigzag fashion. It never moves in a smooth up to down, top to bottom, bottom to top. It's always a zigzag, up, down, up, down, up, down. In any direction it moves, it'll move in this up, down, zigzag fashion. We have peaks. Peaks are highs. There the market turns down. Market will climb and then get rejected at that level and turn around and move down. And that peak, that little mountaintop, that capital A as it were, is a peak or a high. And valleys, the opposite, where the market moves down and then turns up. So you get this low, this swing at the bottom, this V shape. The market comes down and then moves up. And that point where it changes direction is valley or a low. The zigzagging will occur in all three directions, up, down, and sideways. Now we'll use this to our benefit and we can make a few bucks from this. We take advantage of the fact that the market does this. So what is a trend? Well, the market has a tendency to travel in one direction for a length of time. These longer-term movements are called trends. Trend is a prevailing move in the market direction. It's built of a series of peaks and valleys. An uptrend is composed of consecutively higher peaks and higher valleys, while a downtrend is composed of consecutively lower peaks and lower valleys. As the market climbs from the lower left to the upper right of your chart, it will do it in a bouncy, zigzaggy, up, down, but generally upwards movement. And in a downtrend, it goes from the upper left of your chart to the lower right, and it also will move in a zigzag, up, down movement from the upper left to the lower right. Never in a straight line, always in a bouncy, zigzaggy movement. Here is a couple of artistic renditions of an uptrend and a downtrend. The blue arrow is an uptrend, and as you can see, each new high, each new peak is higher than the one previous to it. And this applies to the lows as well. Each new valley is higher than the valley previous to it. This is the technical definition for an uptrend. Consecutively higher highs, consecutively higher lows. And a downtrend is the red arrow. It's the same as up, just in the opposite direction. We get consecutively lower highs and consecutively lower lows. So every new low is lower than the low previous to it, and every new high that is formed is lower than the high previous to it. Trends are relative to the time frame that you're trading. For example, if you're looking at the daily charts, a trend could last for months. While on a 1-minute chart, a trend can last for 2 hours. While a trend moves in one general direction, up or down, it will move in that zigzag pattern. It's never formed in a nice, smooth motion. In this example, we're looking at an uptrend. It's a 4-hour time frame. Each candle takes 4 hours to make. And you can see where the chart bottoms out. You've got the blue dashed line. And then it rallies, it climbs for 72 candles and tops out. 72 candles, that's 12 days. This is that same trend, and you can clearly see in the chart that price is making higher highs as the market climbs. Each high is pointed out with a dashed blue line, and you can see every new high that's being made is higher than the high previous to it. This is that same trend, but at this time we're looking at the lows. Each new low that's being made as price pulls back and moves down and then changes to move back up, we've got these low spots and they are consecutively higher. So each new low is higher on the chart than the low previous to it. This is an example of a downtrend. Now as the market falls, it's making a series of lower highs and lower lows. Right now we're looking at the highs. Again, they're marked by the dashed blue lines. So as the market in the downtrend makes these little rises, they are consecutively lower. Each new high being made is lower than the high previous to it. And the same chart again, we're looking at the lows. Each new low is lower than the low previous to it. Definition of a downtrend is consecutively lower lows, consecutively lower highs. Now, trends are broken down into different durations. We've got 3 different durations in a trend. Now, as the trends are zigzagging, we've got the long-term trend. Now, this goes from the left edge to the right edge of your chart, and you can see that in this case, we've got a main trend, the long-term trend, and it has a definite upward direction to it as it goes from the lower left of the chart to the upper right of the chart. Now, that can be broken down. Parts of that we can look at a medium-term trend, and the medium-term trend goes in the opposite direction of the long-term trend. So as price is making its way up, you're going to see there's going to be sections where price does pull back, it retraces and goes in the opposite direction. Now, within that medium-term trend, we have little short-term trends. These short-term trends are in the direction of the main trend, and they are going against the medium-term trend. They're in the same direction as the main trend, but they're very small moves. The main trend is the trend direction that carries the most weight. So when we're looking at several time frames, the highest time frame will show you the predominant trend direction. It's always a good idea to see what the longer term time frame is doing. A setup for a short trade may not turn out too well if the next higher time frame is moving in the opposite direction, is moving up. I want to always consider the time frame I trade to be the medium-term time frame. The trend is the direction that the market will present us with the best trading opportunity. So if the longer-term trend is up, that's kind of the direction that we would like to trade, because as the market is moving up, it's making higher highs, so there is more opportunity to take long trades. That's it for the peaks, valleys, and trends video. Thank you very much for joining me, and I'll see you in another video.